Hello traders, this is TradeOg's weekly video in which I'm going to go through the bigger picture. Here I will go through daily charts, comparing DAX index with the DAX futures, then DAX index with the US indices, then go a notch higher to the weekly charts and also compare DAX with the US indices. Now in the previous bigger picture video that I have posted on X on Sunday, January the 5th, there were two scenarios. One was that DAX will go up toward this candle here, which was the FOMC candle from December the 18th, following the S&P, which already went higher, or it's going to also follow the S&P and test the December swing low. Those were the two scenarios. First one was for the up move. This is the one that we got, and market filled this big gap here, tested that origin and went also higher. Now when we observe index versus futures, and now we could also debate about this chart, should we use not back adjusted or should we back adjust. This is the not back adjusted chart in which you can observe how DAX in a recent few days had no upside follow through above the previous high. So this is the high from Friday, December the 24th, and that would be this one on index. So on index the all-time high, and here on futures that would be this candle, and you observe here that this was the candle from Wednesday, while this was the one from Friday, and high of the day here was 10 points below this level. So above this level nothing much. 10 points below this level, meaning 20,535, which is in line with the thing that the DAX here made, which is around 20,400. One of the setups from Thursday in the morning notes was about a potential false break above the resistance zone, which, as was written back then, shouldn't really go much higher than 20,400. It went there on NFP Friday, making the move before the NFP release. And when I position my cursor here on the Friday candle, you can observe in this here part how high of the day was basically to the point 20,400. Now when we observe DAX with other markets, when we compare them, and especially with the S&P like this, then you can observe even on this chart with many references on it that there is a significant difference between DAX and the S&P. I have already posted the clean chart on X, and it is looking like this. So this is the FOMC move from December 18th. Very big candle on the S&P. It went down, made December swing low same day like DAX. This would be December 20th, and from that period it really is very different what S&P did versus what DAX did. S&P did both up move into the origin of the FOMC move and then down move to test the December swing low, making here a spring. So S&P already did all of this, then DAX followed, and now look at the difference where the NFP candle is on DAX, where the NFP candle is on S&P. This here would be the big election gap on Trump winning the elections, and this is the bottom end of the election gap. One of the concepts is saying that big gaps are likely not going to be filled from a single attempt. On this first attempt down, they just poked a bit inside that gap. Then this was basically to the half of this gap. This move was just a marginal lower low, meaning just a little portion of the gap, of the remainder of the gap was filled, and now even more. So now we are left with this very small part, like maybe 1/3 of the initial gap. But the bottom end of the election gap is still important. That's the point of all of this talk. And also observing that DAX index and DAX futures daily chart, and now observing this, can DAX now follow S&P to the downside? And also what's going to happen here, because these two lows are only marginal lower lows and market is going down toward that bottom end of the election gap. Now we should observe other markets as well, and this would be Nasdaq. Also, you see how they are having two marginal lows. Like S&P, also tagged one of the previous untested cash closes, which is always a good idea to have them on charts. You know, sometimes people are going to say, but this is like a bounce here in hindsight. This is not hindsight. This here was the untested close from Wednesday, November 27th. So it is here on this chart from Wednesday, November 27th, or maybe from the day after, when you chart, when you do levels and zones and other stuff on your charts. So this is there for weeks and weeks. Those things are important. Moving down to Dow Jones, I said before that not only that there is a very visual divergence between DAX and the US markets, it is also a very visual divergence between S&P and Nasdaq on one side and Dow Jones and Russell on the other side. And also talked about how all of this here is looking like a bear flag, both on Dow Jones and on Russell. The level here to watch on Dow Jones is still 41,860. This is the level that traders can remember from this period here, which was in September. It was very important in September, October, and at the end here, end of October, beginning of November, when there was no downside follow through below it. Remember that when you are looking at daily charts and you have a candle like this, this candle closed below the level, yes, that's correct, but there was no downside follow through. You didn't get another candle below with the lower low with another close below this level. No, they were just hanging around there, and then this would be the election gap on Dow Jones, which is already filled. That's important thing with daily charts. First, close is the most important thing on a daily chart, and then follow through. The most common mistake that rookie traders are making on any kind of time frame is seeking continuation, always seeking continuation, while in real trading, many moves are false breaks or some ranges without a continuation. And this would be Russell, which also had a marginal lower low below the December swing low. So these two markets, Russell and Dow Jones, firmly below daily 50. Now Nasdaq is also below daily 50, which was the only market hanging above it, while S&P is going up and down through the daily 50. And in here you can see how in some days they used daily 50 as support and in some other days as resistance. So still important thing, and also markets can spend a lot of time between daily 50 and daily 200. Daily 200 is quite a bit away here. This is something to observe. Bottom end of the election gap, and if that failed, then this, which would be November swing low. Now going higher to weekly charts, this here highs, you see that they really couldn't go much above the upper end of the blue channel. Blue channel is holding the price for around 2 years and slightly more, while this red one is holding the price for around 4.5 years. In the first push higher here above the previous all-time high, which was May high, market held there 9 weeks of holding and no downside follow through. Now here market is for 5 weeks of holding support and no downside follow through. And you can see on these charts how market is moving. You have trend phases, then range, then again trend, then range, some pullback, trend, range, trend, range. It's not just like, trend, pullback, trend, pullback, trend, pullback, trend, pullback all the time, but it is also a lot of time in ranges, range. Now let's observe other markets. This would be the S&P weekly, and these are those marginal lower lows that I just showed on a daily chart. People can argue here, do we have here head and shoulders? Remember that head and shoulders can be a very tricky pattern, and for day traders, daily chart is going to be more important. This is Nasdaq, in which for which I think July 2024 high, which is around 20,700, is important. Market is going there. This is the very prominent swing high, and I think it is important. Is market going to hold there or not? Is it going to poke, make a false break? Is it going to have a move with downside follow through, or just push a bit below it and then pop higher? This is Dow weekly, which was in some kind of wedge, pushed a bit above, go back inside it, and now it's here as shown on daily chart 49,860 important. While this is Russell, in which on this weekly chart you have very good examples of both spring here and uptrust here. Obviously you can see other examples as well. So that would be about the bigger picture for the next week. Watching are these moves are going to have some downside follow through? Is DAX is going to follow these US markets with them or not? And in the next week, we do have some potential catalyst. There is nothing on Monday. There is US PPI on Tuesday. And this time PPI is coming before CPI, which means it is more important. Markets tend to react both on PPI and especially on the CPI. But if PPI is before the CPI, then market tend to react on the PPI and then on the CPI as well. On Thursday, there is US retail sales and unemployment rate, which is something that could be responsible for some maybe knee-jerk moves, but PPI and CPI is the most important one. And then nothing much on Friday except Chinese GDP, industrial production, and retail sales. So once again, is DAX going to follow now US markets in their already made down move or not? And what's going to happen with these marginal lower lows dominantly on the S&P, watching the low end, the bottom end of the election gap, and watching the November swing low, which as we can see here was neatly made right at the daily 50 and around these previous lows from October. So that will be it in this edition of the bigger picture videos.